Problem 3-39B, complete worksheet, and then journalize adjustments. So Moon Theater Production Company's partially completed worksheet as of December 31st, 2025, and adjustment data at December 31st follow. So we can view the partially completed worksheet, but we don't really need this one open as we have all of the information down below here, so we can just close out of that. So we can view the adjustment data here. So we will be using the letters again in order to label each of these. And then we also have our read the requirements, however they do pop up as the problem goes. So for requirement 1, we complete the worksheet, use letters A through E to label the 5 adjustments, the account names and adjusted trial balance amounts as provided in the question have been entered into the worksheet for you. Finish the partial worksheet by completing the adjustments and adjusted trial balance columns. Complete the adjustments columns by using the letters A through E to label the 5 adjustments. Abbreviation used, equip is for equipment. So we're going to scroll on down a tiny bit here so we can see our columns and open up our adjustment data. And of course, as always, the data balances from the unadjusted trial balance come from the ledger, which is not shown here. So they put this data in here, these balances for us from the ledger. So for adjustment A, I've squeezed this down here so we can save some space. As of December 31st, Moon Theater Production Company has performed $900 of service revenue and has not yet billed customers. And because we have not yet billed customers and it's the end of the period, we need to show how much they owe us. And then which account shows how much customers owe us? It is AR. And AR is an asset and it's increasing. So that's going to be a $900 debit to accounts receivable. So we're going to first input our letter for adjustment A and then a debit of $900 to accounts receivable. And then why do they owe us some money? That's because we performed a service. So we need to increase revenue. And then how does revenue increase? Revenue increases with a credit. So let's go ahead and find our revenue account. So we have service revenue here. And then just keep in mind that we are crediting this. So we will be moving into this column here. So this is going to be A. We're still working on transaction A on the credit. So let's just double check, scroll back up here since they did give us the adjusted trial balance columns to make sure we're in the right column. And it does appear we got service revenue in the correct one here as a credit. So now that we have our debit and our credit, let's move on to transaction B. So B, at the end of the month, Moon Theater Production Company has $500 of supplies remaining. So what this means is when we send in our intern to go count the supplies, the intern comes back and says we have $500 worth of supplies remaining. So that means our remaining balance of supplies on hand will be $500. So that's going to go in the adjusted trial balance as our leftover balance. But what do we need to do to get there? We need to credit supplies for the difference. So supplies previously had $1,300 and now they have $500. So what is that difference? It is $800. So we're going to use up $800 of our supplies. So that's going to be B there. But then we also have our debit account that we need to worry about. So what is the debit when we use up supplies? That is supplies expense. So we are going to need to scroll down a little bit and our supplies expense, and that's going to be towards the end here. So supplies expense, and on what side do expenses increase? With a debit. So we will be debiting those supplies. So that is for transaction B still. And again, we are debiting for $800 to record our supplies expense. All right, so we have our debit and our credit for B. We move on to C. So prepaid insurance of $1,300 remained. In other words, that 1,300 is how much we should have on our account balances. But let's take a look and see what it was previously. So prepaid insurance for 2,100 debit. So we're going to need to lower it, it appears, because we have 1,300 remaining. So that is going to be a $1,300 balance here as a debit for prepaid insurance since it is an asset. So how much do we have to lower our prepaid insurance to get it to 1,300? That is going to be 800. So that means we had to credit, since the balance is a debit, 800 in order to lower our prepaid insurance down to 1,300. Now we need to find the account that says we used up insurance. So that is going to be insurance expense. So again, with insurance expenses, how do those increase? Those would increase with a debit. So we're going to go to insurance expense, our lost account here, and that is going to be for transaction C we are still working on, and we are going to debit for 800 to record that insurance expense. And then next up for D, we have depreciation expense for 3,500. So it's already in the title of that adjustment, but depreciation expense here on equipment, that is increasing by 3,500. So we're going to go ahead and put D and then increase our depreciation expense by 3,500 as a debit, because again, expenses increase on the debit side. And then the other account, our credit account, is going to be, as always, an accumulated depreciation account. So we can scroll back up here. That is a contra asset. So with contra assets, those ones increase with a what? A credit on the credit side. So on the right side. So then we're going to go to our credit column, and we can scoot this up here to make sure we put it in the right line, the right row. So that is going to be a credit for transaction D of 3,500. And remember, accumulated depreciation only accumulates. It only gets higher. So let's then move on to our last transaction. That is E. We have accrued salaries expense of 500 that hasn't been paid yet. So what is happening here? So at the end of the year, we've calculated that we owe our employees this $500. However, it's not payday, so we'll pay them next year. And because we're not paying them, we owe them. So that's going to mean that we have a salaries expense, but since it is not paid yet, it will be salaries payable for the credit. So let's go ahead and scroll down to the salaries expense, the second to last account here, and that is going to be transaction E. And again, what side do salaries, expenses, and expenses in general increase with a debit? So we're increasing our salaries expense, and since we are not paying it, cash is not involved. However, that salaries payable is. So let's go ahead and move our data table up here so we can just block everything else off and make sure we get the right column. So with this first column, this is the debit, then we'll be needing to put a credit in since we are increasing a payable. And again, since a payable is a liability, it increases with a credit on the right-hand side. So we'll go ahead and input 500 there. All right, since we have completed our adjustment data here, we can close out of this, and now we'll need to add our columns to make sure our debits equal our credits in the adjustment section. So one thing we can do before we add these is really quickly make sure that the debit side and the credit side for the adjustments each has an A, B, C, D, and E. So that looks right. Looks like we have one on each side. And then let's go ahead and add these through. So 900 for the debit side, and we're going to scroll down, and then we're going to add these up: 3,500, 800, 500, 800, and that gives us a total of 6,500. So if we did everything correctly, our credits will be the same. So let's go ahead and clear this out. Move this over. All right, so we have 800 plus 800 plus 3,500 plus 500, and then plus 900. And that is going to give us a total of 6,500 again. So that means our debits equal our credits here, and then all is well in the adjustments column. So now we need to go to the adjusted trial balance. So that is going to mean that we are taking our unadjusted trial balance and adding the adjustments if there are any for each of these accounts. So easy one here for cash. We did not touch it. So that is a debit of 3,500. The balance remains the same. Then accounts receivable. We take a look here. We had a previous balance of 6,000. We are adding 900 dollars here in the AR, so that's going to give us 6,900. Now, since we already did these while we're doing the adjustments, we know we have $500 worth of supplies left and $1,300 as a balance in our prepaid insurance. So that looks great. And then equipment, that's our last asset here. We didn't touch it, so our balance remains the same for 23,000. Now our contra asset, accumulated depreciation, equipment, that sits on the credit side. So it looks like we had a previous balance of 8,100 and then we added 3,500. So that is going to be 11,600 on the credit side, since that is where contra assets regular balance sits on the credit side. And then we are moving into our liabilities here. Accounts payable we didn't touch, so that is going to be a balance on the credit side of 5,000. Salaries payable had a 0 credit balance before. However, we added $500 into it, so we have 500 for the balance. And then the capital account, we didn't touch that, so 21,100 is going to be the balance there. And then withdrawals, the plus side for those is on the debit side, so that is 28,500. And then moving down to service revenue, that switches back to the credit side as being the regular balance, but we did have a balance sitting in the credit side previously, so we have to now add 900. So that's going to give us a balance of 60,500 on the credit side. And now we are switching back yet again. We have the expenses, so that's the fun one. They are on the debit side. That's where the regular balance sits. So we'll start with depreciation expense for equipment. We did not have one previously, however, we did add some expense. So that means 3,500 is going to be our new balance. Supplies expense also had a 0 balance previously, so we will add in 800. Utilities expense we did not touch, however, it did have a balance, so we have to add that in here for 5,400, excuse me. And then salaries expense, we added 500 to this 24,000. So we have a $24,500 balance since we added $500 of salaries expense. And then lastly, insurance expense here. We had 0 previously, however, we added $800 worth. And now the fun part again, we add the debits all together to see what the balance is there, the total at the end. And then also for the credits, we do the same, and we want to make sure those equal each other. And again, even in the previous problem, the most common mistake on a problem like this is students, and sometimes your instructor, putting the balances in the wrong column. So as you go through, especially when you get towards the bottom and we are switching back and forth between these equity accounts, it can get a little bit sticky there. So let's go ahead and add each of these columns. So we will start with our lucky debits. So we have 3,500, 6,900 plus 500 plus 1,300 plus 23,000. And then continuing down because there are more. 28,500, 3,500, 800, 5,400, 24,500, 800, and that is our last one there. So the total is 98,700. Let's go ahead and add that in. And let's hope and pray our credits also equal the same. So it looks like our first credit starts down here. So I'll just scroll down and see all of them. So we have 11,600 first, 5,500, 21,100, 60,500. Anything else? Nope. And that also gives us a balance, a total at the end here of 98,700. So we'll enter that in. Our debits equal our credits, and all is good in the world here. And one way to troubleshoot if you mess up somewhere along the way and these don't equal each other is that the number that you're going to want here at the end is our debit column here from the unadjusted trial balance plus the adjustment will give you the adjusted balance afterwards. So that's why these should all equal each other, because we were just adding 6,500 to 93,800 on this end, and same thing here to give us a total of 98,700 in the adjusted trial balance. Let's go ahead and check our answer. Oh no, where have we gone wrong? So it appears on the last transaction here that I had a typo. So for this one, the salaries payable was transaction E. So I'm not sure if anybody noticed that, but that is what is holding us up here from getting a correct answer. So careful, double check your work, and that goes the same for me. Let's go ahead and check our answer. Good job. Okay, so the worksheet, remember, this is just a worksheet. In the real world, they just do it in Excel because it makes it much easier. And then we are going to journalize the adjusting entries after this. So remember, these adjustments have not been entered into the official records. All right, so let's make it official. So requirement 2, journalize the adjusting entries. Record debits first, then credits. Select the explanation on the last line of the journal entry table. So as of December 31st, Moon Theater Production Company had performed $900 worth of service revenue but not yet billed customers. So you'll notice that matches our first transaction up above. So that was A. So again, A, we had accounts receivable for $900, and we also had $900 worth of service revenue. So they're just asking us to journalize that here. So we're going to increase our AR, our accounts receivable, by 900, and our service revenue. So that is by 900. So let's take a look at what explanations we have. So we have this to accrue service revenue. So let's go ahead and check our answer for that. Excellent. Okay. So for B, at the end of the month, Moon Theater Production had $500 of supplies remaining. So again, you can scroll back up or work off of just the transaction given. You can review the worksheet. It'll let you pop back into it that way or scroll back up. But we have B, we have a supplies expense for $800, and then we have a credit to supplies since we are using those up. So we have supplies expense, we are increasing with a debit, and then we have our supplies, which are getting reduced here with a credit. So we have $500 worth of supplies. So don't let this one trick you. We have $800 worth of supplies that we used up, as you will recall up above. So that could trip you up there, make you put in 500, but again, that is what is remaining as the balance, not what we used up. So you'll see again, 800 credit for supplies, 800 debit for supplies expense. We'll scroll back down and then we will input our explanation. So to record supplies used, let's go ahead and check that answer. Excellent. Okay. Now for C, prepaid insurance of $1,300 remained. So again, this one's another tricky one. You'll want to actually take a look at the adjustment that we put into our worksheet. So our insurance expense will be going up and our prepaid insurance amount will be going down. So again, let's go ahead and scroll back up just to make sure we have the correct amount here. So C, we had prepaid insurance, we lowered it by 800. So 800 credit, 800 debit. And we will click in here. And then we have to record insurance expense. So we'll check our answer there. And just a quick note, if you decide to use the review the worksheet option here, it'll allow you to see everything that we input up above. However, this is not available on the test, so you will have to scroll back up and down. So let's go ahead and check our answer. Fantastic. We love it. Okay. So now we know we have depreciation expense. So what accounts are involved? We have depreciation expense equipment. And of course we have our contra asset, the accumulated depreciation on equipment. And this one is straightforward. It is a $3,500 credit and debit. No math involved in this one. And then this is to record depreciation on equipment. So we'll go ahead and check our answer. Well done. Okay. So now E, our last transaction, accrued salaries expense of $500 that hasn't been paid yet. So what was that one again? We have a salaries expense. So we know our expense is increasing. However, we are not paying it yet. And what does that mean? That means it's a debt, a liability, a payable. So we have salaries payable that we are going to use here as the credit. So that is 500 for the debit, 500 for the credit, and our explanation is to accrue salaries expense since we are not paying it yet. Let's go ahead and check our answer. Excellent. Cool, so that's how we do the worksheet. You do the worksheet, then you take the adjustments when you're done and enter those into the journal. Now after the journal in the real world, if we were doing manual accounting, we would then go to post these debits and these credits to the ledger. But most companies use computer software, accounting software, and the accounting software always posts for you. Thank goodness, because that's one of the most tedious parts in my opinion. And that's the part that I made the most mistakes on as a student, and I did not like posting it anyway. Okay, so now we have to prepare the adjusted trial balance. So first we'll start with cash, and that is a debit balance of $3,500. Accounts receivable, I'm just going off of my scratch paper here that I have. You can go ahead and open up the extra worksheet from up above here. You can review the worksheet here, or if you are doing this on a test, you will need to scroll back up. Tedious, I know. All right, so then we'll have supplies next up. Prepaid insurance, more assets here. Our last asset of equipment, and that is $23,000. And then we move on to our one contra asset, or accumulated depreciation on equipment, which follows equipment. So that's $11,600 as a credit because it is a contra asset. So that means it will have a balance on the credit side. So again, now we're moving on to liabilities, accounts payable. Balance sits on the credit side for these guys. Salaries payable. 500, and then we have capital, Valdez capital, Valdez withdrawals, but remember these ones have opposite side balances here. So we have the capital account, which has a balance of $21,100 on the credit side. However, withdrawals, the normal balance sits on the debit side. So keep that in mind. 28,500 is the balance on the debit side for the withdrawals, and we're going to keep on moving on down here. So we have service revenue next, and that one is a credit balance for $60,500. And then we have our expenses. So we have depreciation expense, equipment, we have supplies expense. I'm just going to input all of these for time's sake. Utilities expense, salaries expense, and insurance expense. All right, so that the expense balance sits on the what side? Debit. And again, if you forget, you can look at the accounting equation that we have over here on the right hand side that I put in post-production. Alright, so 98,700. And if I were doing my due diligence here, I'd add these up with the calculator, but to save you some time, I'm inputting the balance again that we had up above that we did use the calculator for. So let's go ahead and check our answer. Fantastic. Wow, we are done.